Take
No
effect
room
tomorrow.
left for Mexico or for Canada. No, the tariffs, they're all set.
U.S. tariffs came into effect in the early hours of this morning, and so did the Canadian response.
The U.S. stock market is in turmoil after the United States President Donald Trump firmly declared that he will move forward with the sweeping new tariffs against Canada, Mexico, and China. These tariffs are set to go into effect on Tuesday, March 4th, 2025. Trump has made his stance clear. There is nothing these countries can do to change his mind. The tariffs include a 25% tax on all goods imported from Canada and Mexico, and an additional 10% added to the previous 10% tariff on Chinese products, bringing it to a total of 20% tax on Chinese imports. This decision marks one of the most aggressive trade moves in recent years, echoing the 2018 tariff war, which disrupted global trade and led to retaliatory measures from key U.S. trading partners. Canada, Mexico, and China have already vowed immediate retaliation, signaling that a full-scale trade war is imminent.
U.S. tariffs came into effect in the early hours of this morning, and so did the Canadian response. Canada will be implementing 25% tariffs against $155 billion worth of American goods, starting with tariffs on $30 billion worth of goods immediately, and tariffs on the remaining $125 billion of American products in 21 days' time. But in the meantime, our tariffs will remain in place until the U.S. tariffs are withdrawn, and not a moment sooner.
The financial markets reacted swiftly. The Dow Jones Industrial Average dropped nearly 650 points same day, and the S&P 500 experiencing its largest losses since December as concerns mount over the potential economic damage caused by the tariffs. This is a direct response to fears of escalating trade tensions and the uncertainty surrounding retaliatory actions from affected countries.
Government's efforts, Ontario will also launch its first round of retaliation. Starting today, LCBO, the largest purchaser of alcohol in the world, will begin removing U.S. products from its store shelves. And as the exclusive wholesaler, American brands will no longer be available in LCBO catalog, meaning other retailers, bars, and restaurants in the province will no longer be able to restock U.S. products. This is an enormous hit to the American producers. Every year, the LCBO sells nearly $1 billion worth of U.S. wine, beer, cider, seltzers, and spirits, including more than 3,600 products from 35 states. As of today, every single one of these products is off the shelves. Also, starting today, all U.S.-based companies will be banned from taking part in government procurement. Every year, the province and its agencies spend about $30 billion on procurement, alongside our more than $200 billion planned to build infrastructure. U.S.-based businesses will now lose out on tens of billions of dollars in revenues. They only have President Trump to blame.
Auto stocks, chip makers, and manufacturers saw sharp declines as companies brace for the financial impact of higher tariffs, also reflecting fears of supply chain disruption. But why is the financial market reacting this way? You see, the financial market thrive on stability, but tariffs create unpredictability for businesses, a risk that traders and businesses are unwilling to ignore. Investors are already selling off stocks because they understand these tariffs will increase production costs for companies, reduce corporate profits, making stocks less attractive, disrupt supply chains, forcing companies to adjust operations, slow down economic growth, potentially pushing the U.S. toward a recession. Economists warn that while businesses will bear the initial burden, these costs will ultimately be passed to consumers through higher prices. One estimate suggests the average American household could spend up to $22,000 more annually on essentials such as groceries, clothing, and electronics. Tariffs on imported materials mean electronics, furniture, and household items will also see price hikes. industries reliant on cross-border trade will struggle to adapt quickly. The president has further indicated his intentions to impose reciprocal tariffs in a month. This comes at a time when signs of economic weakness are emerging in the US, with shares of automakers, chip makers, and other industries are declining amid fears of an escalating trade war. These tariffs are expected to impose major financial burdens on American auto manufacturers who are already preparing for increased costs. The auto industry is particularly vulnerable to tariffs due to its dependence on cross-border tariff-free trade, a system that was solidified during Trump's first term under the USMCA, United States-Mexico-Canada Agreement. Automakers depend on imported parts from Canada and Mexico to keep production costs low. The new tariffs threaten to further disrupt an already strained supply chain, which is still grappling with higher than normal inflation. Since tariffs are typically paid by importers up front, businesses will either absorb the added costs or pass them on to consumers, potentially increasing the price of new cars by up to $4,000 or even as much as $12,000 in some cases, adding further strain on consumers already dealing with inflation. In response to the tariffs, Honda has announced that come 2028, they'll be shifting production of their new Civic model from Mexico to Indiana to avoid the tariffs. Other automakers may follow suit, moving operations to US factories. While moving production to the US avoids tariffs, it doesn't eliminate the problem. It just shifts the burden onto consumers who will end up paying more for cars and other goods. President Trump has justified these tariffs by citing the flow of fentanyl, arguing that encouraging companies to build factories in the US will help combat the crisis and strengthen the economy. However, many experts question this logic as tariffs have little direct connection to the fentanyl issue. Instead, economists argue that these trade policies will do the following. 1. Increase consumer prices at home. 2. Strain relationships with key allies. 3. Hurt American exports as foreign nations respond with countermeasures. Trump has also threatened to extend tariffs beyond China, Canada, and Mexico, potentially targeting the European Union and nearly every major US trading partner. If that happens, the risk of a full-scale global trade war grows exponentially. However, retaliation is already in motion. Canada, Mexico, and China have started to impose their own tariffs on American goods they import into their countries, and this will make US exports more expensive in global markets, making it harder for them to compete. This could also hurt American automakers internationally, making it harder for them to compete against European and Asian car manufacturers. But haven't we seen this before? This isn't the first time Trump's tariffs have disrupted the economy. In 2018, similar trade policies led to the following. 1. A 0.2% decline in US GDP due to trade disruptions. 2. Higher prices on cars, electronics, and household goods. 3. Job losses in agriculture and manufacturing, which relied on affordable imported materials. History tells us that tariffs don't just hurt foreign exporters, they also harm American businesses and consumers. And now, history appears to be repeating itself. So what happens next? The next few weeks will be critical as the US braces for countermeasures from Canada, Mexico, and China. Some possible outcomes include 1. A full-blown trade war. Retaliation could make US exports more expensive, cutting into American businesses' profits. 2. Market instability. Investors may continue selling off stocks, fearing prolonged economic uncertainty. 3. Rising costs for consumers. Higher tariffs mean companies will pass the cost onto consumers, worsening inflation. Although tariffs are meant to protect domestic industries, history suggests the unintended consequences often outweigh the benefits. With markets in freefall and consumer costs rising, the real question is, will the US government reconsider before the damage becomes irreversible? What do you think? Are these tariffs a necessary step for American industry, or are they setting up the economy for a bigger downfall? Let's talk about it in the comments below. If you found this breakdown helpful, hit that like button and subscribe for more in-depth analysis on the biggest economic stories shaping our world. Stay informed, stay ahead, and as always, thanks for watching.